Hello everyone, welcome back to our channel. I am super excited, as I told you, to announce that I will be starting with your corporate accounting and financial management, your CS executive paper, okay, which is a practical as well as a theory paper. I had already announced that and I've got a overwhelming response from all of you. Thank you so much for that. Now, just to take you all through what are we going to do, how we are going to proceed with taking these lectures, and when am I going to take up each chapter, and we are going to do everything in detail. Okay, so all these lectures are going to be in English. All right, so we are going to start with financial management. Okay, and everything is going to be in English. Financial management for your new syllabus, it is a part of your corporate accounts, 40 marks, right? Now, who am I? For those who don't know me, I am CS Fatema Kagalwala and I am an all India rank holder 13 for my CS professional level. Okay, I have been into teaching for more than 8 years now, was associated with ICSI, and I am taking practical subjects here. Okay, now why am I so enthusiastic about teaching and taking this particular subject? First thing, I really like taking practical subjects. Okay, I enjoy solving, and our solving, whenever you will attend my lectures, as when you all keep coming and attending, you all will understand that all the concept based solving we just do not jump onto the questions and start solving a given sum. We understand the concept which is required for us to have a given solution. Okay, now these papers, you can score exemption marks only if you attend my lectures, you go through my notes, you practice them. Okay, you sit with me when we are doing past year exam questions. All the instructions which I am giving you, you are following that religiously, I am sure you all can get exemption marks. Exemption marks are 60 and above. Okay, so when you get 60 and above marks, you are set to have exemption marks. So you are kind of, you don't have to give that paper in the next attempt in case you have to give a group again. Okay, but if a paper is having 60 and above marks, you are exempted. I had scored more than that, means I had crossed even 70. So I want all of you all also to get really good marks in this. So what is the first step for that? You all have to join my WhatsApp group. The link is given in the description. We will be taking some lectures on YouTube on live. There will be some lectures will be on Zoom, so that there can be an interaction between us. Okay, we can do the doubt solving again in that. But to get all the notifications to stay connected with me, you have to join the WhatsApp group. Okay, now what all benefits you will have in joining WhatsApp group, I have already told you. Okay, so with that, you will always be updated and you will come to know about my lecture. Okay, now since I am telling you that today we are going to start with financial management. So when you see the new syllabus, even the old syllabus students, you all can attend each and every lecture of mine because the chapters all remain same. Okay, and I teach all the questions. Even when it was an MCQ paper, I used to teach financial and accounts in proper solving pattern. Unless and until you do not solve a given question completely, you will never be able to solve an MCQ. Okay, so all my questions, even past when it was an MCQ paper, I have solved all. Okay, and for the new syllabus, again, this is a proper solving paper, so nothing to worry. We are going to do financial management over here. And just to financial management, so I have just for you all to understand that the syllabus. Okay, financial management for 40 marks, you have chapters from 11 to 19, 9 chapters. Each chapter we are going to do in detail in English with the notes, solving everything. Okay, so today we are going to begin with one of the very important topic, which is the part of your capital structures chapter. Okay, capital structure is a little vast chapter, so we have divided that chapter. So kind of we have capital structure separately, and in capital structure there is a concept which is known as leverages. So today we are going to begin with that particular topic, leverages. Okay, so stay right in here, put a thumbs up that you all are ready. Okay, listen to me, understand the concepts, you will be able to then solve it later. Okay, pay attentive. Okay, take a grab a pen paper in case if you all not have a calci, and then we can start doing this together. So just put a thumbs up in the chat box so that I know that you all are ready to start. Okay, so see, these are my notes, and okay, these are, we are going to begin with the chapter. Yeah, so once you all are ready, just put a thumbs up and then we start. Come on, and please share this link with your friends, ask them also to attend. All right, it is going to benefit all of you, right? So share it as much as possible, ask them to be there in the lecture. It is going to be fun solving all this. Okay, we are going to enjoy solving each and every sum. So you all don't have to even worry about it, because I have done the solutions also for you all. I want you all to refer to my solutions, because this is the way you are supposed to solve in the exam, apart from the MCQs. But you are supposed to have this book in this manner only as possible. And then we need to begin. Thank you so much, everyone. Okay. Hi, everyone. So today we are going to begin with a very interesting topic, which is leverages, a part of your financial management capital structure chapter. Okay, this is financial management capital structure. There is a part in capital structure which talks about leverages. Okay, now what is basically the simplest meaning of leverage is nothing but a relationship. Okay, establishing of a relationship. Now what type of a relationship? Now see, you all don't have to worry about anything, whether you all have got the accounting concept, you all are from commerce background, art, science, all that. You do just keep that all aside. Okay, we are going to do it from basics, and then we will go up to a little higher level of the sums and then the exam questions. So you will get a hang of it, as if when we reach the last sum you will be solving it before me. Okay, so just pay attention to the basic concepts. Once your basics are clear, you have to not worry about anything and any question being asked. Okay, so in leverages we talk about a relationship. Okay, any two factors, if I give you any two factors and I ask you how they are related to each other, that relationship is known as a leverage. So when I'm talking about financial, I'm talking about the finance of a given organization, and the most two important concept, okay, the most two important factors is sales and profit. These are the two most important factors of a given company. We, as an investor, or as I want to know how that company is doing as a financial manager, okay, I am analyzing the financials of the company. I would want to know how much is the sales, and with the help of that sales, how much a company is making profit. So sales and profit are the two figures which I would want to know in the first go. Okay, so I will take you all to understanding first what it is. Okay, here, correct. Leverages, introduction I have already given you. It is a part of the capital structure and it talks about a relationship. It talks about two factors, factor 1 and factor 2. Now, when I'm talking about these two factors in a financial sense, I'm talking about profit and I'm talking about sales. Where these two factors, there is some kind of a connection between them. There is some interdependence on each other. Okay, one factor is dependent on another factor. So basically, I can say that my profit, okay, if I have an agenda or I have a vision and mission of making a profit of rupees 100 in this given year, so how much sales, okay, I will have to have. Okay, so what will be my sales? How much turnover should a company make to have a given a certain amount of profit? I want 20% of profit in my company or 30% of profit in my company. So how much of sales will that be to give me that much amount of profit? So there is a relationship between two of them, profit and sales. Correct? Now, understanding how profit and sales are connected to each other, I will be able to make profit only if my sales, or I can say my selling price, is greater than my cost. So say if I am selling a given pen at rupees 12, okay, this is my selling price, and I have my cost price for this pen is 10 rupees. So I can say yes, 2 rupees profit I am able to make. Correct? So profit will be generated only if my sales is of a higher value than my cost. So if I want to understand this in a form of a leverage, in a form of a relationship, so the dependent factor is profit over here always. Which is the dependent factor? Profit. Why so? Only based on your sales we will be able to ascertain the profit. Why? Because from the sales we will have to subtract the cost and then only profit can be arrived. Okay. So leverages is the dependent factor, which is profit, and upon the independent factor, which is sales. Okay. It is just a basic relationship. Percentage change in the profit, this sign is percentage, this triangle sign is change of the dependent factor, which is profit, and percentage change in independent factor, which is sales. So basically if the sales will increase, my profit will also increase. Okay, you all will understand this formula also slowly. Okay, you all will understand. So if I give you 2 years and I ask you to compare that, okay, in 1 year there was sales was 100, in my next year my sale has become 150. So there is a change in the sales. Because of that change in the sales, there will be change in the amount of profit also. But how much? How much is that changing? Whether it is changing exactly proportionately or there is a difference in the change, that we have to understand. Okay, so one thing you all have understood, that if sales increases, then profit will also increase. Until now you are clear? Okay. All right. So if you all are clear till now, till here, again just put your thumbs up so I know, then I can move forward. You all are with me? Okay, perfect. I want everyone to be with me, pay attention, understand with the help of these notes. Again, I'm here, I'm explaining you all. Okay, you all can jot down a little bit here and there, but pay attention first. Okay, yeah, okay. So some of you all have messaged me that yes, it is clear, so I am moving forward. Okay, so again I have written the formula for you all, that leverage is nothing but percentage change in the profit upon percentage change in the sales. Now let's see with an example. Okay, First thing is for you all to understand the income statement. Okay, so I am just going to take you all through the income statement once. The example we will take it forward. Okay, now in income statement, how it is prepared, first we write the sales amount. Okay, so this is particulars and this is the amount in rupees. Okay, so we write sales, then there are certain expenses, okay, which we have to subtract. Now all the expenses which we are doing in an organization are two types. One is variable and one is fixed. Okay, variable expenses are those which are directly related to sales. Okay, so and means they have a direct proportionate relationship with the sales. So say if your sales, I'll give you an example for variable expenses is, say, for the classes. Okay, if I will have 100 students, I will have to print 100 notes, for example. Correct? It is variable. Amount of students, amount of notes, same variable related. Okay, so there are some expenses which are happening only because of that volume of sales taking place. But then there are certain expenses which remain fixed. So say if I am running these classes, I have to pay the rent, irrespective I have 1 student or 10 student. I have to pay electricity. Correct? So that does not depend upon the turnover. It does not depend upon the ratio. So say in my organization I am having 2 people and whom I am giving salary. I cannot say no that okay fine. Only if I will have this much of sales I will give you this much of salary. No, na. So wages, salary, all those things are something which is fixed. It is not going to vary with your sales. So from sales, when I remove the variable expenses, we arrive at something known as contribution. Okay, basically this is a kind of a profit which is able to arrive at after absorbing the variable expense. Then we have to subtract our fixed expenses. We will get net profit before interest and tax. We subtract interest, we get net profit before tax. From there we subtract tax, whatever will be the tax rate, we get net profit after tax. And this net profit after tax, if there are no preference shareholders, this is the entire profit belonging to equity shareholders. So equity shareholders profit is net profit after tax. If you will divide that by number of equity shares, you will get earning per share. Earning per share. Okay, that per share how much is a given shareholder earning. Okay, with the help of the profit of the company. Okay, this much of income statement you all have understood. From sales, I am removing my certain expenses. I am arriving at NPBIT. From that, interest and tax we remove. We get the profit which is available for shareholders. We divide that by number of equity shares and we get earning per share. Okay. With the help of this income statement, now see here. Okay, I have taken one example. Simple, small example. Say we are manufacturing 1000 units. Okay, and my selling price is rupees 10. Okay, rupees 10 selling price. So what will be my sales amount? Selling price, variable cost, contribution. All this 3 we can have it in per unit form. Per unit. Okay. Price per unit. All the 3 we can have it in the form of price per unit. Fixed expenses can never be per unit. It is fixed. It is not variable or it does not have any relationship with the sales. So you can never do it per unit. But sales, variable cost and contribution can be in form of per unit. So now since I am having 1000 units and my selling price is 10, my amount is going to be 10,000. Variable expenses, when I calculated, it is amounting to rupees 6 per unit. So 6 into 1000, I'll get 6000. When I'll subtract, I'll get 4000. So I can say my contribution is rupees 4 per unit. 4000, divide that by 1000, right? So 10, 6, and when I subtract that, I'm getting 4. Fixed cost is given to me 2000. Therefore, my NPBIT, net profit before interest and tax, is coming to EBIT or NPBIT, anything. Okay, NP, net profit before interest and tax. You can write as net profit before, like this, or it can be EBIT, anything. Okay, earnings before interest and tax. It is coming to rupees 2000. Clear? Okay. Now understanding leverage, understanding the relationship of sales and profit. When my sales was 10,000 rupees, my profit came up to 2000. Let me change my sales volume. Now I want to increase my sales production by 20%. When I am increasing it by 20% means what? 1000 units, no, plus 20% units. That means 1200 units I will sell now. I want to increase my sales by 20%. By 20% means you have to take your calculation and do 1000 plus 20%. 1000 plus 20%. 1200 units, correct? Now with the 1200 units, I am going to multiply by 10 into 10. 1200 to 6, I am going to get 7200. See, this has changed. And here it will be 1200 into 4 for contribution, 4800. Correct? But my fixed cost is going to remain same, 2000 same. And my profit before interest and tax now with the increased volume of sales is 2800. Okay. So how much did I increase my sales by? 20%? Correct. But my profit has increased by 40%, not 20%. How? See this. Leverage is nothing but percentage change in the profit upon percentage change in the sales. Okay. How will I get percentage change in the profit? See this. 2800 is now my profit. Subtract by 2000, divide by base. So difference, it is nothing but difference. Divide by the base. Base is 2000. Difference of the amount of profit is 800. Upon 2000, 40%. Correct? So percentage change in the profit has become 40%. Percentage change in the sales was 20. So my leverage is 2 times. Leverage is 2 times. So I can say that if my sales increase by 20%, my profit will increase by 40%. Okay, by 40%. Why so? Because there is this fixed cost which is involved. Okay, you see this fixed cost? Because of this fixed cost here, there is a change in the profit which is not exactly as per the change in the sales. Okay, because of the fixed cost. Now, looking at the entire income statement and understanding and analyzing the change in the sales, change in the profit, I was able to understand that the leverage is 2 times. Leverage is 2 times. Okay. Now basically 20% into 2, 20 into 2 will give me 40%. Right. and I have done this directly. Now how can you also do this directly? How to find the leverage directly? Will I keep doing this or what every time to find a given leverage? So let's see, understand. See, cost, two types, fixed and variable. Rent, salary, etc., which is fixed, and variable is related to sales directly. Okay. Now if you see the income statement, and if you see these two factors, one is contribution, okay, and one is your NPBIT. Why I am saying these two factors? Because the fixed cost, because of which the profit changes in proportionately, okay, not exactly as per sales. Why is there change in profit more? Why did profit change by 40%? It is because of this fixed cost. Now this fixed cost is lying between two factors, contribution and NPBIT. So by simply dividing contribution and NPBIT, how much is contribution? 4,000. How much is NPBIT? 2,000. You are going to get 2 times. I did this directly. I can do it directly. 20% profit has increased, sales has increased. Multiply by 2 times. That will be the percentage increase in the profit. Directly. Okay. So how did I get this? Contribution upon NPBIT is equal to 2 times. 4,000 divided by 2,000. Now this particular type of leverage is known as degree of operating leverage. Degree of operating leverage. Alright. Now degree of operating leverage means there are certain types. That means I am talking about the first type we have just understood is degree of operating leverage. Okay, because of this fixed expense, fixed cost. Now remember one thing, fixed cost. I told you rent and salary. This is something which is related to your day-to-day operations, because you have to do it constantly. These are basic operations of the organization. But there is one more type of fixed cost which is known as financial fixed cost. What is financial fixed cost? Now to run a business, I have say share capital, but I have also taken some loan. So say I have a bank loan, or I have some debentures, okay, borrowed funds basically. Okay, there is some amount of borrowed funds for which I have to pay interest. So this interest amount is my financial fixed cost. Whether I make sales or no, whether I make profit or no, I have to pay interest to my creditors, these bank, debenture holders, any other type of borrowed funds. I have to pay interest. Say I am paying interest at the rate of 10% to whatever is my loan amount. I have to pay. Whether there is sales, whether there is profit or no, it is irrelevant. It remains fixed. Okay, so one type of fixed expenses which is coming here immediately after contribution is an operating fixed cost, from which we arrive at NPBIT. But there is this interest factor here, so we'll have to subtract the interest factor. That is why I showed you the income statement first, so that you all can relate. Okay, now see this. Operating fixed cost will help us understand about degree of operating leverage, and financial fixed cost will help us understand degree of financial leverage. Okay, I am taking the same example. NPBIT was 2000, no, in our example, the first one, the one which we did here. Here, we stopped here. I am just taking this example forward. Okay, so NPBIT is 2000. Say my interest amount is 1000. So my net profit before tax, NPBT, will come as 1000. So how I'll find my degree of financial leverage? It is percentage change in the NPBT. This is the dependent factor, upon percentage change either in sales, you can do it, or you can do percentage change in the contribution, or you can do percentage change in the NPBIT. All these are independent factors. Okay, all of this are independent factors for the degree of financial leverage. Okay, why I will do interest is coming between what? NPBIT and NPBT. Very easy no to remember. This was coming fixed cost, here it was coming between contribution and NPBIT. So my formula became contribution upon NPBIT. Simple, directly. You don't have to do this percentage change and then percentage change again. Okay, and this interest is coming between NPBIT and NPBT. So my degree of financial leverage will be simply NPBIT upon NPBT. Okay, so NPBIT is 2000, NPBT is 1000. Again, my degree of financial leverage is 2 times. Directly I can find out directly. Okay, so with the help of this, you all have understood now degree of operating leverage and degree of financial leverage. Now we have to understand degree of combined leverage. As a financial manager, I will be interested to know both operating and financial. If a company is having amount of loan, okay, I will want to understand the financial leverage. Okay, in fact, it is very important to understand the financial leverage because of the high amount of loans and debts, a company has, if it is there. Okay, and operating leverage, both I would want to know. Simple, the formula is degree of operating leverage into degree of financial leverage. Okay, so now degree of operating leverage, I told you contribution upon NPBIT, and degree of financial leverage is NPBIT upon NPBT. NPBIT and NPBIT I'll cut, contribution upon NPBT. Fantastic, see this. It is contribution upon NPBT. It is able to absorb both the fixed cost, the operational as well as the financial. See, it is coming between these two, no? It starts from contribution and it is ending at NPBT. Simple formula to remember. Degree of combined leverage will be contribution upon NPBT. Clear everyone? So far? Okay, as per our income statement, both fixed cost, financial, operating comes between contribution and NPBT. Therefore, and hence, our degree of combined leverage will be nothing but contribution upon NPBT. Everyone has cleared till until you are understood. I will not move to the sums unless and until the basics are absolutely done. Okay, means it has to fix in your mind. Okay, now before I start any given question, I will just take you all through this basic introduction of leverages. Okay, this particular file of mine. Okay, these notes. So again, it is the same thing which I have just written and explained to you. If you will see, it is a relationship between two variables. We just did percentage change in dependent and independent factor. We are talking about sales and profit. Okay, so this all you all can just read up. Okay, I have already completed. Now why it is important to understand leverages? I told you over here that when my sales amount increased to 20%, my profit has jumped by 40%. So don't you think the higher the leverage is, greater the risk? Because what will happen is, say in any bad time, if this happens to fall by 20%, this will also fall by 40%. So we need to understand leverages to see the amount of change it will bring in the profit due to change in sales. So if it is a boom period, if there is a lot of sales happening, a higher leverage will always be in your favor. But if there is a recession where there is no sale of your products, there's something going wrong, so your leverage, the higher it is, you will have a higher loss. Okay, that much of change in the profit will also come into the picture. Okay, so that is why if you will see this, if sales is going up by 1% and profit increases by 4%, I can say that my leverage is 4. So say if the sale will go up by 5%, profit will increase by 5 into 4, 20%, because leverage is 4. Right? So if sales will drop by 1%, profit will also fall by 4%. So higher leverage means high risk. So if you have high fixed costs involved, that means you'll have high leverage and you will have higher risk. Okay. Then you have degree of operating leverage. Okay. Percentage change in EBIT upon percentage change in sales. Instead, I just did contribution upon NPBIT. It is to measure the business risk. Okay. So say if your degree of operating leverage is 1.33 times, it will indicate that EBIT is more sensitive with respect of sales. So say if sales is increasing by 10%, EBIT will simply increase by 10 into 1.33 times because of your operating leverage. And sales will decrease, your EBIT will also decrease. Degree of financial leverage. Why we have financial leverage here? Okay, because of the financial fixed cost. Okay, so here also I have given you all the example over here. Some companies may not have a financial leverage because they will not have any kind of borrowed funds. All right, so you are supposed to know all this. Degree of combined leverage, we have already arrived at the formula. And profit volume ratio. Okay, profit volume ratio is the ratio of contribution over sales. Okay, profit volume ratio, we will come to it later. Contribution upon sales. Okay, that we will come to it later. I will give you all how to solve also this. And then there are certain questions and answer format I have put. You all can read through all this. Okay, we are going to obviously again come back to this sheet and also do the theory once again. Okay, but you all can at least now read it up. Why? Because your concept is now clear. You will be able to understand the theory. When you are able to understand the theory, you don't have to mug it up. Right? You will be absolutely in a comfortable position to answer a question if asked in theory form. Okay. Now I am just taking you all today with the basic concepts. Okay, it is not we won't be able to finish the entire leverages today. We will just understand, since we have done the basics, we will do our basic concept sums. I will also give you all some homework. Okay, I have given you all the solution in my solution book. So there is nothing like you will not be able to solve it or understand. Anything simple which I feel I have done this type, I will give you all for homework. So you all are ready? Okay. So far everything understood? Okay. If everything is clear and it is understood, please let me know that yes ma'am, clear, we can move ahead with the sums, with the questions. I think once we will solve the questions, the concepts will become much clearer, much better, and you'll get a hang of it. Okay, cool. So let's start. First we will read the question. Yeah. Okay. Basic concepts. First type, there are certain types of sums and leverages. I am doing the first type today. Basic concepts 1. You are a finance manager in Big Pen Limited. The degree of operating leverage of your company, it is given, it is 5, and the degree of financial leverage of your company is 3. Your managing director has found that the degree of operating leverage and degree of financial leverage of your nearest competitor, Small Pen Limited, is 6 and 4 respectively. In his opinion, Small Pen Limited is better than Big Pen Limited because of the higher value of degree of leverages. Do you agree with this opinion of your managing director? Give reasons. Okay. Now some kind of a situational based question we are starting with, but it is very simple and very interesting. Okay. See this. Small Pen and Big Pen, they have given me the degree of operating leverage and degree of financial leverage of both the companies. For Small Pen, it is 6. For Big Pen, it is 5. And degree of financial leverage, Small Pen is 4 and Big Pen is 3. In order to understand the risk factor involved in these two companies, only operating and only financial leverage will not help. I will have to understand degree of combined leverage. So what I will do, simply multiply 6 into 4 and 5 into 3, 24 times, and Big Pen is 15 times. Now, as per the opinion of my managing director that the Small Pen Limited has got higher value of leverage, yes, it has got 24 times it is. But this Small Pen Limited will be in a profitable position only in a boom period. Okay, because of this high leverage, say if God forbid, there is a recession coming up, so it will get hit by 24 times in the profit also. So that may just end up making losses. In that case, Big Pen Limited, the leverage is only 15 times. So this particular Big Pen Limited is better in recession period. This is the opinion which you can write it in your own words, that you are in a boom period. Small Pen Limited is obviously in a better position because its leverage is 24 times. But in a recession period, which is a better one? Big Pen Limited. Okay. Fine. I am moving to the next question. Okay, let us read the question. Here, question number 2. They are saying, okay, question number 2 has A and B. First we'll do A. Find operating leverage. They have given me sales amount. Variable cost, they will always give me a percentage of sales only. Okay, always. Then they have given me fixed cost 12,000 and they are telling me to find degree of operating leverage. Very easy. Every time I do this, I am going to make my income statement. Okay. So income statement, sales 50,000. Variable cost is 60% of sales. So 60% of 50,000 is 30,000. Contribution is 20. I got my NPBIT, I got my contribution, both are there. I can find my degree of operating leverage. Okay, degree of operating leverage, DOL. It is contribution upon NPBIT, 20,000 upon 8,000, 2.5 times. Okay. Next question. Degree of financial leverage we have to find. NPBIT, they have given me 20 lakhs and there is a debenture debt 75 lakhs, interest of which is 12%. So when I am doing interest of 12% means I will take 12% on 75 lakhs. Right? So 75 lakhs into 12%. It is going to be 9 lakhs. So let's see. They have given me my NPBIT. So I will start with my NPBIT 20 lakhs. Interest is 12%, which is 9 lakhs. NPBT is 11 lakhs. What is the formula for degree of financial leverage? NPBIT I have got, NPBT also I have got. 20 lakhs upon 10 lakhs, 1.81 times, 81 times. Okay. Good. Understood? Simple, no? Very easy. No problem. We are going to move forward and then we are going to solve a little bit of sums which will have a lot of things in it. Okay, so until now it is clear, understood? So you all have to send me a thumbs up or just a like button, hit the like button and tell me we are good to go for the third one. Come on. Okay, a minute. Sorry, NPBT is 11 lakhs. I have just by mistake written here 10 lakh. 11 lakhs, 20 upon 11. Do it. 20 divided by 11. Yes, 1.81 times. 20 lakhs divided by 11. Good. Thank you everyone. So attentive you all are. I'm so happy. Good. Okay. Cool. Fine. Okay, let's read the next question. A simplified income statement of Zenith Limited is already given to us, given below. Income statement for the year ended so and so. Sales, then they have given me my variable cost, fixed cost, NPBIT, interest amount, tax rate at the 30% and net income. You have to calculate and interpret the following: degree of operating, degree of financial and degree of combined leverage. Okay. So let's go ahead. Income statement, I have just copy and pasted it. Why? Because I know I want to find my contribution also. So sales is given, all this is given. Variable cost is also given. Once I will subtract it, I'll get my contribution. Fixed expense is given. NPBIT I will arrive at. Interest is also given. NPBT is 98,000. Just you have to find the 3 degree of leverages. So degree of operating leverage will be what? Put the formula. Operating leverage, it will be contribution upon NPBIT or EBIT. It will be 1.36 times. Just see the figures properly. 2,83,000 and 2,08,000. Okay. Degree of financial leverage will be 2,08,000 divided by 98,000. 2.12 times. And when you will multiply these 2 degrees, you will get degree of combined leverage 2.88 times. You all can check it also if you all want. You all can do degree of combined leverage as contribution upon NPBT and just see whether it is the same. Contribution is 2,83,000 divided by NPBT is 98,000. 2.88 times. Okay, you can cross check if you want to. Now the next question. Clear? Question number 3 is also done. 2, 1. Okay. Question number 4. Okay. The capital structure of ABC Limited consists of common stock of rupees 5 lakhs. Means we are talking about shares. 100 rupees is the face value. And they have rupees 5 lakhs as 10% debentures of rupees 100 each. 10% debenture means 10% is the rate of interest. Sales has increased from 50,000 to 60,000 units. The selling price is rupees 12 per unit. Variable cost is 8 and fixed cost is 1 lakh. Tax rate is 50%. You are required to calculate the percentage increase in earning per share. We need financial leverage at both the units. We need operating leverage again at both the units. And we have to comment on the behavior of earning per share, operating and financial leverage in relation to increase in the sales from 50,000 units to 60,000 units. Okay. Come on, let's see. First, I will make my income statement. Okay. Particulars 50,000 units and 60,000 units. Income statement, I start with sales minus variable expense contribution minus fixed expense NPBIT minus interest NPBT minus tax. I'll get net profit after tax. If in case there is preference dividend, I will write it. If no, then that entire net profit after tax will be profit belonging to equity shareholders. Okay. Now selling price, they have given me 12, variable expense is 8. So contribution will become 4 obviously. So I'll have to now multiply it. 12 into 50,000, 6 lakhs for 50,000 units I'm doing. Then you have 8 into 50,000, 4 lakhs. My contribution is 2 lakhs. Fixed expense is given 1 lakh. I arrive at NPBIT. How I'll get my interest? I told you, no, it is 10%. 10% debentures of rupees 100 each. What is the amount value? 5 lakhs. 10% of 5 lakhs interest will be 10% of 5 lakhs, which is going to be 50,000. Okay. NPBT, tax rate they have given me 25%. So whatever is my NPBT, no, tax rate is not 25%. One second. Tax rate is 50%. Tax rate is 50%. So 25,000 I will have to subtract. I'll get my net profit after tax. There is no preference dividend. Why? Because there is no preference shareholders. This entire 5 lakhs is for equity shareholders. Number of equity shares, 5 lakhs divided by 100. I'll get my number of equity shares. Right? So first 50,000 I have solved. I got net profit for equity shareholders 25,000. Okay, so earning per share, net profit for equity shareholders upon number of equity shares. Net profit for equity shareholders is 25,000. Number of equity shares is only 5,000. 5 rupees. How many shares I have? 5,000 shares. Okay. Degree of operating leverage is 2 times contribution upon NPBIT. Degree of financial leverage is also 2 times. NPBIT here. NPBIT upon NPBT. Okay, and degree of financial leverage and operating leverage, I can have my degree of combined leverage also. But now the fourth question they have asked me is percentage increase in the earning per share. Now if you see, when you will solve it with 60,000 units, our earning per share will change. Why? Because our profit for equity shareholders comes at 45,000. Same thing you have to do. Okay, you have to multiply 12 by 60,000 units, then 8 by 60,000 units. You will get the contribution. Rest everything remains the same. Okay. The moment I get the profit for equity shareholders, I divide that by number of shares. I am getting 9 rupees per share. So there is an increase in the earning per share. How much increase? 4 rupees. So percentage increase will be difference upon the base into 100. 80% it has changed. Okay. By 80% it has changed. Now if I see both the situations of 50,000 units and 60,000 units, degree of operating leverage is also decreasing and degree of financial leverage is also decreasing. Okay, so both the leverages has decreased with increase in sales, and earning per share in fact has increased with increase in sales. So don't you think this is a very good situation for the organization? Their leverage is also decreased and their earning per share, every shareholder will be so happy. Per share their earning has increased to now 9 rupees instead of 5. Okay, so it is a very good win-win situation for the company if there is an increase in the production from 50,000 units to 60,000 units. Clear all of you all? Okay, now until this I have finished this first type. Okay, I am going to move to the second type. But before that, I want to know if everything is okay. Any doubt you all have so far? Anything you all have missed out on? Please let me know in the chat box. Then I will start with the part type 2 sums. Type 2 sums are very, very important from your exam point of view, and I am going to give you homework from there. Okay. So all clear? Come on. Question number 5. Now what is this type? This type talks about you use the leverage to calculate an increase and decrease in profit. Right now we were using profit, sales, contribution amount and trying to find the leverage. Now using the leverage, we will find the increase, decrease in profit, etc. How? Very easy. Okay. You are required to prepare the income statements. Okay, fine. The following information is given of Sunrise Limited. So first thing I'll have to prepare my income statement. So sales they have given me, variable expense is 35%, contribution, less fixed expense, earning before interest and tax, less interest, taxable income 70,000. Already given to me. Okay, you are required to submit the following to the management of the company. First, what percentage will taxable income, okay, increase? If the sales is increasing by 6%, use combined leverage. Okay, what percentage will EBIT increase if there is 10% increase in sales? Use operating leverage. And what percentage will taxable income increase if EBIT increases by 6%? Use financial leverage. Now here they have given you what to use. What if they have not given you? They have just given you this statement. What percentage will taxable income increase? Taxable income is here. Sales is here. Two factors they have given me. Sales and taxable income. Both my operating fixed cost and financial fixed cost is getting involved here. So obviously I will use degree of combined leverage for the first one. Even if it is not given, you will be able to ascertain it. Second one, they are asking me the relationship between EBIT and sales. Where is EBIT and sales? Here. Which is the fixed cost getting involved? Only operating. So I will use DOL here. And last one, they are saying in EBIT and taxable income and EBIT. So taxable income and EBIT, only financial fixed cost is getting involved. So I will use degree of financial leverage. Okay, so even in case they have not given, you all don't have to worry. Okay, you will be able to ascertain it. Now they have already made the income statement. Fine. Okay. So particulars, and then I have done the working notes. First, I am trying to find the degree of combined leverage. Degree of combined leverage will be contribution upon NPBT with the help of the income statement. They have given me contribution 2,60,000 and they have given me NPBT, taxable income, net profit before tax, 70,000. With that, I was able to find my degree of combined leverage. Okay, now pay attention. Sales is changing and NPBT is getting also affected. It is changing. With the help of combined leverage, I can say that if sales will change by 1%, NPBT will change by 3.714 times. This is what you all agree with me, right? This is what we are doing since when? That when sales increases by 1%, leverage is the times with the other dependent factor is going to increase by. So NPBT is changing by 3.714 times. They are telling me what will be the change in the NPBT, in the NPBT, taxable income change, if the sales is increasing by 6%. So if sales will increase by 6%, by how much will NPBT change? Simple, cross multiply. Easy. 6 into 3.714. Easy. Directly you have to just multiply 6 with the leverage. 6 into 3.714. So I can say that if the sales will increase by 6%, my taxable income will also increase by 22.284%. Okay. See, for those who are giving answers in MCQ format or things, so then you will be able to know which answer is the most appropriate one based on the options. The ones who are solving the entire sums, you can take it up to 3 decimals or round up the second one, okay, to its nearest place. Next question. Okay, second one. What percentage will EBIT increase if there is a 10% increase in sales? I will use my degree of operating leverage. What is the formula of operating leverage? Contribution upon NPBIT, 2,60,000, and NPBIT is how much? 80,000, 3.25 times. So I can say if sales goes up by 1%, NPBIT goes up by 3.25 times. So if sales they have given is increasing by 10%, simple. How much will NPBIT increase? 10 into 3.25, 32.5%. Okay. Same thing. For the last one, what percentage will taxable income increase if EBIT increases by 6%? So first, degree of financial leverage, NPBIT upon NPBT, 80,000. NPBIT is 80,000. NPBT is 70,000. So answer is 1.14 times. So I can say that if NPBIT is changing by 1%, NPBT is changing by 1.14 times. Now in the question they are saying that NPBT is changing by 6%, then how much is NPBT changing by? So 6.84 directly 6 into 1.14. Okay. So net profit before interest and tax, if it increases by 6%, my taxable income will increase by 6.84%. Clear everybody? Okay. I am moving to the next question. Alright. Question number 6. Okay. Same type. Okay. Same type. Nothing. There is no change. Sales is rupees 30 lakhs. Question number 6 we are doing. Sales is rupees 30 lakhs. Variable cost is 60%. Fixed cost is 2 lakhs. Interest is 6 lakhs. Everything they are given to me. I'll make the income statement. I'll get all my required details for the formula. I have to calculate operating, financial and combined leverage. By what percentage sales should decrease to get a BEP? BEP means break even point. Okay, break even point. What does that mean? Break even point means no profit, no loss. Okay, no profit, no loss. At what sales amount EBIT will be rupees 5.2 lakhs? And by what percentage change will take place in earnings before tax, taxable income, for 10% change in EBIT? Okay, so if EBIT is changing by 10%, how much will EBT change? This is the third one. Okay, so let us first make the income statement. Okay, relax, it is very simple. We will understand the concept, we will be able to solve. Sales given, variable cost is also given. Contribution I could find out. Fixed expense is also given. I'll get my NPBIT. Interest is also given. I'll get my NPBT. There is no tax. So this is only. That's it. Here I end. 4 lakhs rupees is net profit before interest and tax. With the help of my income statement, now it is very quick, no, to find the leverages. Come on quickly. Degree of operating leverage, degree of financial leverage and degree of combined leverage. Contribution upon NPBIT. Contribution is how much? 12 lakhs. NPBIT is 10 lakhs. 1.2 times. NPBIT upon NPBT will give me my degree of financial leverage. So 10 upon 4 lakhs, 2.5 times. And degree of combined leverage, you can directly multiply 1.2 into 2.5. 1.2 into 2.5. You are going to get 3 times, or otherwise also you are going to get it 3 times. Okay, 12 upon 4. Done. Okay. Now, one thing I have understood, that when sales was rupees 30 lakhs, given no in the sum, that at sales 30 lakhs, my taxable income was 4 lakhs. They are asking me to find how much sales will decrease that my taxable income will be 0. Break even means no profit, no loss, 0. So the relationship between sales and taxable income, both my fixed costs, operating and financial, is getting involved. So I'll use which degree of leverage? Degree of combined leverage. Everything I have found out. Okay. So when sales is 30 lakhs, they are asking me how much it will have to reduce, by what percentage, so that my NPBT becomes a break even. That means my 4 lakhs has to reduce by 100% to become 0, minus 100%. My NPBT will have to reduce by how much? By 100% in order to become 0. Right? So with the help of this, how much is sales going to decrease by how much percentage? I am going to use the degree of combined leverage in between. So nothing, x into degree of combined leverage will give me 100. If okay, just give me a minute. Okay. So here they are saying that how much the sales should decrease so that my NPBT becomes 0. For my NPBT to become 0, it has to reduce by how much percentage? By 100%. I know my degree of combined leverage is 3, and I have found, I am just assuming this to be x. The change, the degree of fall in the sales is x%. Okay, so x into 3 will be 100. X will give me 33.33%. Therefore, sales have to drop by 33.33%. So from 30 lakhs, I have to minus 33.33%. That means it has to become around 20 lakhs. Somewhere around 20 lakhs. Only then my NPBT will become 0. You can substitute it and you can try to find out whether it is right or wrong. Okay. Next they are saying that at what sales amount EBIT will become 5.2 lakhs. Okay, now sales and EBIT. Sales and EBIT. Only one fixed cost, operating, is getting involved, so I'll use my operating leverage. Okay, over here. Operating leverage. So sales 30 lakhs, it has to drop by how much percentage? Say assuming X. Operating leverage is how much? 1.2 times. NPBIT right now is 10 lakhs. I have to make it 5.2 lakhs, means 5,20,000. So how much percentage drop it is? 48%, no? Difference divide by base. What is the difference between 10 lakhs minus 5,20,000? 4,80,000. Difference divide by base, 10 lakhs. So I am getting 48%. Simple. Degree of operating leverage, X into degree of operating leverage will give me my 48. So X will give me 40. I'll solve it. Okay, X will give me 40. 48, it is not point, it is 48. 48 divided by 1.2 into 100. You all can just please rectify this. 48 divided by 1.2, that will give you 40%. So sales amount has to drop by 40% in order to get an NPBIT of 5.2 lakhs. Okay, right now NPBIT was 10 lakhs, no? So in order to get 5.2 lakhs NPBIT, sales amount has to drop by 40%. So 30 lakhs minus 40% will be 18 lakhs. So if sales amount is 18 lakhs, your NPBIT will come as 5,20,000 for sure. Okay. Now the last part. What percentage will take place in EBT? Okay, taxable income, for 10% change in EBIT. Okay, so EBIT was 10 lakhs. It has to change by 10%. Degree of financial leverage I will use, because between NPBIT and taxable income only one fixed cost is getting involved, financial. Financial leverage is 2.5 times. NPBT is 4 lakhs. It has to change by how much percentage? I have written X. For that how much sign I am assuming X. So it will be 10 into 2.5 will give me X. So 25 will give me X. So NPBT will change by 25% if NPBIT will change by 10%. Simple. You will always multiply this independent factor with the degree of the leverage in order to get the change in the dependent factor. Okay, this is the dependent factor. This is the independent factor. So you see in all the previous ones also I am multiplying degree with the independent factor is equal to this particular change, this dependent factor 48%. You see this also. So how this to solve this? This is the only way to get the correct answer. Otherwise you will try to use your mind and try to solve in your mind, you will not get it. Simple. You are going to multiply the degree with the independent factor. The equation will come properly. Okay. So clear everybody this question? Anybody has a doubt in this question? I want you all okay. I am doing one more sum like this. So I think after that you will be more clear. Okay, so I will not have to repeat it. Okay, someone is asking me about the PDF and the notes. Okay. For that, first you have to join the WhatsApp group. Okay. Join the WhatsApp group, the link is given in the description. Okay. Okay, we will solve one more sum like this. Okay. So let us just read this question. Sales is 20 lakhs, variable expense 50% of sales, fixed cost 2 lakhs and interest is 4 lakhs. So I'll be able to make my income statement with the help of this. I have to find all the 3 degrees of leverages, and then they have given me what would be the sales amount to get the EBT of 8 lakhs, what percentage change is required in EBIT to get a break-even point, and if EBIT will increase by 2 lakhs, what should be the sales amount? Okay, let us do it one at a time. First, I'll make my income statement. Variable, okay, sales is given to me 20 lakhs and variable expense is 50% of sales. Alright, so 50% is 10 lakhs. Contribution will come as 10 lakhs. Fixed expenses is given, NPBIT. Interest amount is also given, and NPBT. So when I will solve all the 3 leverages, operating, contribution upon NPBIT, so 10 lakhs upon 8 lakhs, 1.25 times. Degree of financial leverage will be NPBIT upon NPBT, 8 upon 4, 2 times. And financial and combined operating leverage, I can get my combined leverage, which is 2.25 times. Okay. Now they are asking me the relationship between sales and EBT. That by what amount sales has to change in order to get an EBT of rupees 8 lakhs. So that means I will have to use which leverage? Sales and EBT, no? From year till year. Both my fixed cost is getting used. So I'll use degree of combined leverage. Okay. So from sales to 20 lakhs, it has to change or increase by how much percentage to get an NPBT from 4 lakhs to 8 lakhs. From 4 lakhs to 8 lakhs, how much change is happening? Increase is happening 100%. Difference upon base, difference is 4 upon 4. 100% change, increase is happening. Okay, so x into 2.5 will give me 100. So x is going to give me 40%. So sales amount has to increase to 28 lakhs. 20 lakhs plus 40%. 28 lakhs if it is the sales amount. Only then I'll get my taxable income as rupees 8 lakhs. Okay. Next question. What percentage change is required in EBIT to get a break-even point? Okay. Break-even means no profit, no loss. So EBIT and EBT. So they are asking me relationship between NPBIT and NPBT. I'll use only my financial leverage because I had only financial fixed cost hit between them. So NPBIT as of now currently it is 3 lakhs. From that it has to fall by what percentage? To get an NPBT from 4 lakhs to 0, that means it has to fall by 100%. My financial leverage is 2 times. So 2 into x is going to be 100. X is going to be 50%. Therefore, 50% change is needed in NPBIT to get a break-even point. So my new NPBIT will be what? 3 lakhs minus 50%, 1,50,000. If my NPBIT is 1,50,000, my NPBT will be 0. Okay. Okay. Next one. If EBIT should increase by 2 lakhs, what will be the sales amount? Again, they are asking me sales and EBIT. Okay. Sales and EBIT, only one fixed cost, operating fixed cost is getting involved. I'll use my degree of operating leverage. So from 20 lakhs, sales has to increase by how much percentage to get my NPBIT as rupees, it has to increase by 2 lakhs. So NPBIT has become now 10 lakhs. It was 8 lakhs. It is increasing by 2 lakhs. So how much percentage increase it is? 2 divided by 8. 25% increase. So x into 1.25 will give me 25. X will be 25 upon 1.25. It will be 20%. So sales amount will have to increase now to 24 lakhs. From 20 lakhs plus 20%, it will become 24 lakhs. Okay, in order to get an NPBIT of rupees 10 lakhs. You have to read the question properly. EBIT should increase by rupees 2 lakhs. So EBIT was 8 lakhs, no? Here. So plus 2 lakhs they are telling me. Okay. Come on. Okay, question number 8. Okay, question number 8. We have equity share capital. They have given me a balance sheet of company A. Equity share capital is 5 lakhs. 100 rupees each is the share value. Reserves 10% debenture means 10% is the rate of interest. Current liabilities 3 lakhs. We have fixed assets and current assets. Okay. The asset turnover ratio of the company is 5 times. Profit volume ratio is 20%. Fixed cost is equal to 2 times EBIT and tax rate is 20%. We have to calculate all the 3 leverages and earning per share. Also calculate percentage change in sales required to get a earning per share of rupees 20. Okay, that we will do later. First let us understand this. They have given me an asset turnover ratio. Now what is the meaning of asset turnover ratio? How much sales I am making over how much assets I have in the company, total assets. Okay, so with the help of asset turnover ratio, I'll be able to find my sales amount. They have given me the profit volume ratio. Profit volume ratio is nothing but, PV ratio is nothing but contribution upon sales. So if I'll get my sales, I'll also get my contribution. But in order to get my sales, I'll have to first use my asset turnover ratio. I know my total assets. 12 plus 3, 15 lakhs. They have given me the turnover ratio also 5 times. So asset turnover ratio is equal to sales upon total assets. That will be 5 is equal to sales upon 15 lakhs. So 5 into 15 lakhs is 75 lakhs. That will give me my sales amount. Now this PV ratio is now coming into picture. With the help of PV ratio, I'll be able to find my contribution. PV ratio is 20%. That means it is 20 upon 100. PV ratio is equal to contribution upon sales into 100. PV ratio is 20. I'm taking this 100 on the other side. So it becomes on the division side. Contribution upon 75 lakhs. So 20 upon 100 into 75 lakhs. This is how you solve the given equation, right? From the division, this will go into multiplication. Will give me my contribution, which will be 15 lakhs. So I got my contribution. I have got my sales, right? Sales is 75 lakhs. Contribution is 15 lakhs. So my variable expense will be how much? The difference only, na? 60 lakhs. I'll subtract 75 from 60, only then I'll get 15, no? So 75 minus 15 will be my variable expense. Fixed expenses, they have told me it is 2 times of earning before interest and tax. Okay, so earnings before interest and tax and interest rate. Okay, we have 10% debentures, 50,000. Interest will be 10% of 5 lakhs will be 50,000. No, I'm just putting all the amounts whichever I know. So in my interest column, I'm writing 50,000 over here. Okay. Now I don't know my NPBIT. They are telling me fixed expense is 2 times of NPBIT. That means my contribution is going to be 3x. Okay, it is like 3x, 2x and x. I know my contribution, na? So with the help of this, I can cross multiply. 15 into 2 divided by 3. 10 lakhs fixed expense. So I'll get my NPBIT as 15 lakhs. I'm trying to solve the crossed equation. See, I'll explain you all once again. They have simply not given me all the required details. Okay, interest amount I took it from the balance sheet. This we got it with the help of the asset turnover ratio. Okay, this we got it with the help of PV ratio. Then 75 minus 15 we got our variable expense. So till here we are sorted. But fixed expenses, they are telling me that it is 2 times of NPBIT. So say NPBIT is 1, fixed expenses is 2. So obviously contribution then is 3. 3 minus 2 will only give me 1 na. So I can cross multiply. Why? Because I have my contribution amount. So contribution is 15. 3. So 2 will be how much? 10 lakhs. 15 lakhs minus 10 lakhs will give me 5 lakhs minus 50,000 NPBT. Tax rate is given to me by 20%. So this will be at the rate of 20% of 4,50,000. Net profit after taxes 3,60,000. There is no preference dividend. So this is the profit available for equity shareholders. I will find all my 3 degrees of leverages. Degree of operating leverages, contribution upon NPBIT. 15 lakhs divided by 5 lakhs, 3 times. Degree of financial leverages, NPBIT upon NPBT. 5 lakhs divided by 4,50,000, 1.11 times. And when I'll multiply both, I'll get 3.33 times the degree of combined leverage. Earning per share is the profit available for equity shareholders upon number of equity shares. How many equity shares I have? 5,000. So do 3,60,000 divided by 5,000. We'll get 72 rupees per share. Okay, so this first one is done. All the leverages and EPS we have done. Second one, they are asking me also calculate the percentage change in sales required to get the earning per share of rupees 20. Fine. Now I am finding the relationship between sales and earning per share, the last one. Both my financial and operating fixed cost is involved, so I will use my degree of combined leverage here. Same thing, same concept. Okay, so say sales is 75 lakhs. I have to make my earning per share 20. That means I have to decrease. Currently I am at 72. So 75 lakh sales has to change. Decrease by how much percentage? X. Degree of combined leverage is 3.33 times. Earning per share from 72 to become 20. Difference is how much? 72 minus 20. 52. Divide by 72. So percentage change or percentage decrease will be 72.22%. So X into 33.33 times will give me 72.22. X will be 21.67 times. So sales will have to decrease by 21.67 times. So you can say 75 lakhs in minus 75 lakhs minus 21.67 percentage. It is going to become 58,74,750 new sales amount, if in case they would have asked. Okay, new sales amount in case if it is asked. So if the sales is 58,74,750, your earning per share will automatically become 20 rupees. Okay, all right. So we have finished even the question number 8. So we have finished solving 2 types in case of leverages. Okay, so with this I have completed the first part of your leverages topic. Okay, thank you so much everyone. I will see you again in my lectures. Bye. Okay. Okay, so I am going to continue with the leverages topic in my other class. So for all the other queries, doubts, questions you all have, you all can let me know. Join the WhatsApp group again. Okay, and you can have all your doubt clearing also to be done. Okay, regarding notes also, you join the WhatsApp group, and then over there you can go ahead about asking what has to be done for the notes. Okay, so just let me know, just hit the like button so that I know that this lecture was helpful for you all. And then please revise your leverages before we do the part 2. Okay, because part 2 is now going to be a little advanced level of leverages. I finished type 1, type 2, those were basic questions. No doubt even in the exams they can ask you this basic questions, but we are going to do a little bit advanced level also. So for that you will have to revise your leverages and come, okay, whenever there'll be my next lecture. So thank you so much for hitting that like button. All right, and I'm going to see you all in my next class. Till then, bye everyone.